Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to Zacks Top Stock Picks of the Week. I'm Tracy Reinick, and this week I'm joined by Zacks stock strategist Brian Bolin with two red-hot Zacks number ones. You always don't have strong buys that are also red-hot on the chart, but these two are. And I'm going to start with mine. That's a home builder. Yes, the home builders are hot, even though home sales are down. The home builders for the new homes are still on fire. So let's take a look at what my Zacks number one rank is. It's Toll Brothers, ticker TOL. And what makes it a number one? Why is it so hot? Well, it's got to be these rising estimates. So I like to look at the detailed estimate page whenever I'm looking at these number ones to see what is it that the analysts are signaling here. And you can see as you scroll down on the agreement, the number one place I always go to look, the analysts are very bullish on Toll Brothers. We have 8 up in the last 60 days, 8 in the last 30, and even 1 in the last week for this fiscal year and for next year that analyst has raised for both years. So they did report quite a bit ago. And so this is real bullish that we're getting additional estimate revisions higher for the full year when it isn't time for earnings. Now, the home builders don't all report together. Some are on the fiscal year, some are not, some are on calendar. And so they tend to kind of report at random just around whenever. So we're always seemingly getting other home builders reports in, even if we're not getting Toll itself, we are hearing from some of the others. Now, remember, Toll Brothers is the luxury home builder. And what that means is that their homes tend to average almost $1 million, but they have this whole division that's called affordable luxury division, starts around 500,000 and goes up from there. And that division is red hot. It's targeting those millennial buyers who want the nicer luxury home, but maybe can't afford the $1 million yet. So they're going down to this affordable luxury area. And it's a little less custom than those bigger and more custom homes that are a lot more expensive. Now, Toll Brothers also has a little bit different customer than some of the others because of its luxury. It doesn't rely on the mortgage rate quite as much as some of the others, although it is offering the mortgage incentives, the rate buy downs. So that's helping a lot of the millennial buyers who want to get that rate bought down. So they're not paying the 7%, but paying something a little bit less. But over 20% of their buyers do pay in cash. So that's what distinguishes them as well. And why I like Toll Brothers, I own it in Zacks Value Investor Portfolio. Let's take a look and see what it looks like on the chart with these earnings, because you'll kind of see what's going on with the home builders. Everybody thought that the high interest rates would do their earnings, and it did briefly. We see in 2022, when the Fed started raising, the sales plunged and the earnings plunged down with those plunging in sales, but the sales have started to return. The buyers have gotten used to these higher rates, or they're paying all cash. So the buyers are back, especially when rates go below 7% again. And we see that there's not that much competition with the existing home market, which is the big competition for the new builders here. But you can see the analysts started off a little bit cautious about where the earnings are going to be, but they've been raising every quarter for both 2024 and 2025. And again, here in 2024, after the latest earnings report, and the shares have doubled in the last year, up over 110% during that time. But they're still cheap. Toll Brothers is trading at just 8.7 times forward earnings because those earnings keep rising. And now we're expected to see record earnings. Once again, their margins are remaining elevated as they do have pricing power. And so the spring home buying season, everybody's expecting it to be real strong here. But can they keep up this momentum as it keeps going into next year? The shares likely will cool off historically, home builder shares have pulled back a bit towards the fall, but up until then, anything goes. And I'm expecting a great rest of the earnings of spring buying season, even into the summer. The unemployment rate is still low, and all these things kind of combine to make it a good market for a company like Toll Brothers. So watch the earnings reports from some of its competitors. They're giving us clues, but those have been solid too. So I'm a big fan of Toll Brothers. Again, Zacks #1, strong buy, and it's cheap. Now I'm going to throw it over to Brian because he's got a hot tech name that's in the crypto space, and you won't want to miss it.
Well, thank you for that, Tracy. That was a wonderful pick, Toll Brothers. It's very exciting. Housing is going to get hot, and Tracy explained why. I'm going to move on to something a little different. It's Coinbase. That's my top stock pick for the week. Of course, we're seeing a lot of interest in Bitcoin because Bitcoin is breaking new all-time highs, but just about every other day now. I think most recently 72,000 is the give or take range for whereabouts Bitcoin's at. A lot of people are screaming for it to go much higher. Obviously, 100,000 is probably the next level that everyone's looking for. And then after that, your price targets from several different analysts have it at 120 to 150. And of course, there's Kathy Wood that loves to be way out at the end of the spectrum. She's calling for $2 million per Bitcoin in 6 years. I mean, she's a long ways off. She was right. She was early on Tesla calling for that stock to go to 2,000 way back when. Split adjusted, it did reach it. All right, but let's take a look at why I like Coinbase. Obviously, it's a Zacks rank at #1, and that's the foundation of what we do here at Zacks, that rank. Okay, and that's great. Coinbase is your name. COIN is the ticker. If you haven't realized that yet, it's F for value, D for growth. Kind of think that D should change. All right, let's look at the chart here. Everybody ran up in December in expectations of the approval of the ETF, and it was a sell the news event. But very quickly, as soon as everyone was selling, looking for that quick pop in around here, institutional buyers really started to come in. Those Bitcoin ETFs have seen very large inflows, and that continues to push the price higher. All right, let's look at all the other numbers that I love to look at. Now, here's another reason to love Coinbase. I'm just going to highlight this quarter right here. The company posts $1.04 in earnings when the street is looking for a loss of 9 cents. That is a cataclysmically awesome event unless you're a short. That would be terrible if you were short. That would really hurt. All right, so they've been beating the number. That's great to see. What are estimates doing? Well, with that big beat and flip from going negative to positive, we see estimates going up. Here's losing 18 cents to gaining 34 cents. Here's losing 19 cents to making 25 cents. Here's losing 60 cents to making a buck. And here is losing 49 cents to making 61 cents. It's interesting to see how the analysts expect earnings to move lower. You would expect volumes to contribute to that sort of thing and move that higher. So let's take a look at our top line growth thing that I love to key on. And obviously with Bitcoin running, we're seeing, possibly 30% growth this year and then slowing down only 5% next year for some reason. Who knows why? Those analysts, they all have their own individual ideas. We don't have to agree with them. We just want to be cognizant of them. All right. What's our valuation? Well, when you're growing at breakneck speeds, everyone's going to pile in. And we see it 252 times, we'll call it 253 times forward earnings. That means it's just going to take you 253 years for this stock to pay you back in terms of its earnings. That's a tough proposition, right? But we know that number will normalize in a little bit here. We got 9.8 times book, which is expensive, but not terribly. Considering some other price to books I've seen, we are growing at 51% on the top line. That's great. And recall, we're only expecting 30% for this year. Price to sales, there are 20 times sales. Now, Coinbase takes a healthy chunk of every time you make a purchase or a sale, something like 3%. So all that trading on Coinbase equals dollars. So here's your swing in operating margins. And That is the type of thing that you love to see, going from negative 43 to negative 22 to plus 6. That implies we could be up to mid-teens in the next quarter. That would be great to see if you were a shareholder. So lots of reasons to like Bitcoin. Finally, we'll do a look at the chart. It's IPO. It's going to be great. Everything's going to be great. But we missed earnings as we're rising up to 350. And that sent the stock all the way down to $50 in the tech wreck of 2022. And then we've got the ETF coming, and we did that down and up. Now we've got the halving coming. So are we running up into the halving and then give us an opportunity? And I think we are definitely going to run up. It's going to be another buy the rumor, sell the news. You still have plenty of time. It's mid to late April to when the halving event occurs. Is that going to be a time to sell these stocks? It's a maybe. But definitely I would imagine that there's going to be a lot of front running into that. We've seen it already. I expect it to continue. So look for Coinbase to continue to move higher. All right, that's it for this week. Be sure to join us next week when we take a look at 2 more top stock picks for the week. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.